Welcome back to the Day Trading Show, everybody. Today, we've got a very awesome episode. We're talking about how to avoid big losses. This is an important topic for all traders to understand. James and I are going to give you some tactics that you can make sure you're implementing in your trading right now to avoid big losses. They're easier said than done, I know, but that's why we're going to talk about it today. So enjoy the episode and make sure at the end you drop a comment. Let us know what you think. And if there's any topics you'd like us to discuss, put those in the comments as well. What's up, everybody? Welcome back. We are coming to you from a new location. I've now moved into my new office. Very exciting. We're getting everything set up behind me. Still a couple of things that need to be put away, but very excited to be here. James, it's our first interview, first podcast since the Steve Burns episode, which was a big success. So how are you feeling coming off of that? Are you still reflecting? Are you really excited to try and get him back on again? What are your initial thoughts after the conversation?
No, I love the conversation. Steve and I are best friends now.
That's what you said to me today. That was so funny, bro.
Yeah, he gave me a follow back on Twitter, which is quite cool. But just such a down to earth guy. I think the conversation on the last episode, which was obviously last night, went really, really well. I like just getting his perspective from a much, obviously me and you being younger, just getting his perspective from a guy who's been through it all, through the .com era, everything like that. It was just super, super cool. I'm probably going to go back and listen to that episode multiple times.
Yeah, me too. And I'm looking forward to having some other big guests coming on in the next couple of weeks too after this episode. So in between our important guests, I figured we wanted to get on and do one of our typical episodes where we have a topic of focus that we discuss. And, you, me, and Tom are really getting into the weeds, working on revamping the Black Shirt Club mentorship program. And with the workflow that we're building there, this topic of avoiding big losses was one of the topics that we decided was going to be a headlining topic for the psychology series that we're doing for the Black Shirt Club members. So for those of you that don't know, the Black Shirt Club is a mentorship group where James, myself, and Tom are working exclusively with a small group of traders to help them get funded, scale up their trading, and really just see an improvement in their consistency and P&L overall. We are currently revamping that, and by the time you're listening to this, we'll be getting closer to announcing when we're enrolling new people, when we're opening enrollment again. So just stay tuned here on the podcast. You'll be hearing dates. Make sure you're following me and James on social media if you want to be updated, and make sure you're on my email list. Go to asfx.biz/subscribe. Make sure you're on the email list because I'm also keeping everybody updated through that. It's funny, bro. I post everywhere all the time, and still people that I know look at my stuff miss certain important things. So it's really important for us to, constantly remind everybody, be following us, be paying attention, because you might miss something, and I don't want you to miss when the new enrollment period comes out for the Black Shirt Club. Are you to talk about the Black Shirt Club for a quick second, James, are you proud of the work that we've done? I mean, we're almost a year into running the Black Shirt Club now. We've helped how many people get funded? We've now helped a couple of guys leave their job. How are you feeling after a year of coaching people pretty intensely?
Yeah, I'm really enjoying it, especially being on every single day with the guys. They're getting to learn from both you and me, and now obviously also Tom. I think it's just when if I had something like the Black Shirt Club when I first got into trading, I think I would have avoided a lot of mistakes, such as the topic that we are going to speak about today. So I definitely super proud and of what you and I have done, and just also like it brings such fulfillment in. Obviously we trade, and that's where our main focus is, but helping people to elevate their trading as well has been such a great thing that we've been doing in the last 8 months, call it.
Yeah, almost a year. Yeah, absolutely. All right, so let's jump in with the idea here of avoiding big losses. I think after talking to Steve Burns, there's always that famous tweet that he and I have shared around of like, your trade should end in one of four ways, right? The big win, small win, break even, or small loss. And in that tweet, we're basically saying avoid big losses. So do you want to kick off maybe sharing with everybody your experience with some of your biggest mistakes, some of your biggest losses, and what those taught you? And then maybe I could share some as well.
100%. So when I first got into trading, I think it was just being, obviously from the wrong educators, just being fed the wrong information. So when I first got into trading, which was in December 2018, I would trade off, obviously swing trading, but we'll just enter trades obviously had no idea of position sizing, and then would have no stop loss and just hold until the trade turned profitable, which obviously led to bad habits. And I had to get rid of those. That took like, even after joining you, a good like 4 or 5 months to get over those habits. And obviously now it never happens now with the big losses. Obviously we're going to take losses, but they've never been big, and that was the big game changer for me and my trading. I think a lot of people, as even was speaking on Steve Burns, last night, he said that we always, as humans, we always tend to not let our winners run, but try and hold our losses to try and get back to break even in hope. But that is like the worst thing. And I agree with him when he says the number one key to traders not being profitable is taking huge losses, because they take wins, and then they think they get this ego, they try and over position size, or they move their stop loss. That was one thing for me as well. Move the stop loss. No, if I just move it another 20 pips down, price should reverse, and price just carries on going. So, yep.
So I would think that what we can take out of that was well said. You said a couple of important things there. The first one being not moving your stop loss is an easy way to guarantee that you don't take big losses. Before that, the initial step should be, of course, controlling your position size. If the position size is controlled, then you're never going to be able to take a huge loss unless you end up moving the stop loss. So like you said, the best solution is keep the position size controlled and also always use a stop loss. I think if you do both of those things, you're already putting yourself in a position to avoid big losses. It's really easy, I think, to find, if you're in the game long enough, it's easy to find a strategy that you like. Whether it's going to work for you or not at first, you might need to, learn something about yourself or develop a characteristic within yourself a little bit more to do that strategy really well. But I think finding the strategy is easy. Then it's about managing capital. And I think what people often do is they try to trade these small accounts, small amounts of capital. And it's happening less now because of the funding companies, but they try to trade small accounts, and that isn't the way that you would ever trade a large account. Your risk management is different. The way you're managing these trades is different. You don't want to be wrong. You're willing to risk that money because you think you can just refund it. There's so many psychological things that go into that. So I think if you can, and then one other thing is 6 out of 10 traders, according to my Forex funds, are not using a stop loss at all. So if you use a stop loss and you don't move the stop loss when the trade is working against you, say instead maybe get out of the trade even before it hits your stop loss. If you can figure out a way to do that, that's even better, right? So then you're actually moving your trade into one of those 4 that I mentioned, right? You're moving it from a big loss into a small loss. You're avoiding the big wipeout. So using a stop and controlling your position size. I think another thing that has tripped me up in the past, because you mentioned 2 right there that are very similar mistakes that I used to make, and still it happens. Like I think it happens less, but it still can creep in. Like I took a trade a couple of weeks ago where the stop loss, or it was like 2 weeks ago, where the stop loss, I was a little bit more generous on the space of the stop loss than I needed to be, and I took the full stop. So could have been tighter on that stop loss, could have had smaller, had more controlled risk on that. But another area that I think is important to talk about is adding into trades, where that can cause a hiccup too, because then you think that you're right, or maybe the trade isn't working for you and you start positioning in, because then, okay, if I'm down on it, but I add in, if it goes back to entry, I'm break even. I think that mindset too ends up leading you to more often taking bigger losses than recovering some of those potential losses for. So it's really about accepting losses, which I think if you take away everything that I just said in that little, probably way too long of a rant, but little rant, I think it's ego, right? Like you don't want to be wrong. So then you move your stop loss. You don't want to be wrong. So you lost a trade and now you take a bigger position on the next trade. You want to make that money back. You're letting your anger in that. I would bucket it in just negative energy. You're taking that to the chart. You're taking that out on the chart versus, I think, a perspective of like abundance, a perspective of positivity. So I feel like that's where it really comes from. Wouldn't you agree? It's like you people don't like being wrong, but if you get good at being wrong in trading and you're fast at being wrong in trading, you don't lose a lot of money. And then if you have a high win rate and you keep those losses small, like you, like me, I mean, I think even you can look at guys like Tom, 60% win rate guys that are still profitable, but 60%. Still, 100%. It's about keeping the losses small and not ever taking big losses. So stop loss and position size are the 2 most important for me.
100%. And I just want to say 2 things to add on to that was the first one is Bruce Kovner, one of the market wizard greats, was he says that whatever you think you want to risk, cut it in half. So if you think that your risk, that you can accept a risk tolerance of 1% per trade, trade at 0.5%. It's going to be a lot easier to accept that loss.
Right.
And then the second one was, it'll come back to me now, but I think this is what it was. It was be willing to accept, once you push that button, if you're risking 1% of your account on that trade, if that trade, the worst possible outcome that can happen is it hits your stop loss, you lose 1%. You should fully accept it when you click that execute button to enter the trade. You should be willing to accept that, because you don't know if that trade is going to be a winner or a loser. So once you put on the risk, you should not be moving your stop loss, because you should be willing to accept that you've put on that risk. No one else did it. You put on that risk. You should be willing to accept it. I think that's one of the key things is just guys, they'll rather be right than make money. They think they'd rather be right, and the ego, they'll move their stop loss or just add into losing positions instead of making money. Instead of just taking the loss, getting back in, and actually another great setup presented that same day and it went 4R and you could have actually made your money back and some. They just still holding that trade and then end up holding it for days on end. I was one of those guys when I first got into trading, 100%. Hasn't happened to me in a long, long time. Probably since in the first 2 to 3 months since I joined you, but that was me. I used to be holding trades sometimes for like 2 weeks, bro, and going into like 30% drawdown. And
but I think that comes from a perspective too. Like, because if you look back to when you first got into trading before you found ASFX, like that perspective is not understanding risk first. You know what I mean? Like to take drawdown for that long as a day trader doesn't make any sense. Maybe as an investor, but not as a day trader. And that goes back to even the topic of what we spoke to Steve about yesterday, which is context. And I think this is super important to bring up here, because you can avoid big losses if you keep your time frame context in mind. If you're trading on a 15-minute, like for what we do with the D1 entry, the 15-minute and the 1 minute. And this is what we teach in our course. The D1 is one of the systems that we teach. We're using shorter term timeframes. To stay in a 15-minute and 1 minute time frame that you use for entry, to stay in that trade for 4 or 5 hours of drawdown probably isn't going to end up being a winning trade. If you look at our testing and if you look at our live trading of that, it's not going to normally end up working out for you. So it's important to understand, okay, in the time frame that I'm looking at doing my analysis on, that's the time frame I should be making all of my decisions. I shouldn't take a position on the 1 minute and try to hold it for 3 days. It's normally, I think, especially if you're trying to make money, you've got to keep the context in mind. The time frame context really, really matters, because then you can stay very short-term focused, and then it becomes even easier to accept, okay, this isn't working, cut this loss, let's look for something else. Come on. You know what I'm saying? Because there's plenty of time left in the day. People get caught up in the short term, which goes to a lot of things that we've talked about before, you know, like short-term satisfaction. Everybody wants that short-term result real quick, you know? Like you say, quickly all the time. But in trading, you see now, like, look at you getting these payouts that you've gotten in the last month. These are big payouts. This is what, 2 years worth of stacking funded accounts and slowly chipping away at 1R, 1.5R wins and stack. You know what I'm saying? So people underestimate the amount of time and patience that it takes to stack the capital that you need to get to the point where you can say, hey, I've got a lot of money to manage here. This is a quick loss. Let's take this loss. Let's get out of here. But again, I think trading with the small account ends up making you make these weird psychological decisions where you're like, well, I'm only trading a $500 account. I'm down 200. I might as well just keep in this trade, because if I lose the whole 500, it's just whatever. I'll fund it again. You know what I mean? That's just not trading. That's not the right way. It's gambling.
It's complete wrong mindset as well. And as you say, it's just a lack of capital. If you're trading $1,000 account, which but personally I don't recommend. I'd rather just invest that in education, and or if you're really educated and you're consistently profitable trader, get into one of the prop firms. That's what I would recommend. I would not recommend trading with anything less than, to be fair, if you're trying to go full time, I wouldn't say anything less than $100,000, and that's just the reality of trading. I don't mean to seem rude or anything like that, but that's just the reality of trading if you're trying to go full time. But yeah, I think they just get these bad habits, because as you say, if you're trading, you should be treating the same. You should be trading the same as if you were trading $1,000. If you're trading $1 million, I think you should be trading the exact same. Otherwise, you're just building bad habits, and that's why so many people quit in trading, is because they come in, they do these bad habits, and then they realize, I can't do this, and then they give up after a year or 6 months, and then but bro, you didn't even take it seriously, you know?
Right. And I think that's also lack of good education. Like that's like not being around the right people. You know what I mean? If you look at the people that you and I spend the most time with and the people that we talk to, they're people that take their trading really, really seriously,
Oh, yeah.
you know?
Yeah.
And I
Me
think
and
a lot
Steve
of
are best friends, bro.
that's exactly it, bro. You and Steve are best friends. Right. Yeah. I mean, even if you look at the way Steve was describing when we asked him about his trades yesterday, he was saying how everything he's doing, he knows his signals and he knows his risk. That's what he kept saying. I know my signals and I know how to control my risk. That's it, bro. Because then it's about saying, because I mean, look at it. In today's, this might sound pretentious, but like there's more money available in today's world than ever before in history.
Yep.
So it's not about acquiring capital and then and trying to get the money. It's more about who can manage money well, I think. And especially now that day trading is like a super popular career almost. You know, there's so many successful day traders nowadays. There's so many people doing it from home and with prop firms and with banks and everything. Like it's not about, I think, being the hot shot one-off guy that can be a day trader, because now it's about who can just manage money, who can sustain the long term. Because look at like what we talked to Steve about yesterday, the retail trader boom and bust through 2020. You know what I'm saying? Like the people who only were buying and holding, and now they're all getting wiped out or have been wiped out. So that's what I'm saying. Sustainability is really important. And I think, how do you survive? You avoid big losses. Tom even posted about this on his story yesterday. He was like, I had a losing day on the charts, but then he was outside eating dinner, having a drink. And he was like, I had a good day off the charts though. So it's about understanding like, look, I might lose trades, but it's not a reflection of me as a person. And I think that's another thing that people could do. Like you and I have other things off the chart that keep us busy. We keep ourselves out of just living a trader life in a way, like this guy attached to the screens. And I think other people are learning how to trade or trying to, make their first couple of months, couple of big wins in trading. They get lost in the sauce of it almost. And then they don't have those things outside of trading that they can find value for themselves in. You know what I mean? Like you're really great at golf. You're back to rugby practice. You're doing these other things that you could be like, yeah, I had a shit day trading, but I played really well at rugby today. You have these other things where you can be like, look, man, it's not always going to be my A game. Trading, like you said, if you really get this down, the idea of avoiding big losses, you really get this down is when you say, I know that the outcomes of all my trades are unknown. So that's why if they're unknown, you're following a process, win or lose, that's what you judge yourself on. But then you still can go to these other things outside of trading and find self-worth. Like, what are you 100%. Doing with your relationships, with your family, with your sport, with your community? Like those things, I think is where then you can still feel good about yourself and not let the loss be the end of the world. Like some people let it be,
100%. So I'll just also I completely agree. And that's the reason why playing golf, getting back into rugby, because you got to sustain yourself outside of trading. Trading is not the be all and end all. It's not who we are, it's what we do. So there was just one thing I wanted to say as well as JC. It's a JC Livermore quote, obviously one of the greatest traders of the past 100 years era, right? He said that taking a loss, entering a trade and taking a loss does no damage to him. He can sleep fine. Entering a trade, moving his and not taking the loss damages his pocket and your emotional state. And that's don't quote me on it, but that's what basically you're saying is damages his pocket and emotional state. And I think that's very true. You don't want to go to bed if you're a day trader with an open position that you've been holding. Now you risk 1%, but now you're down 3.5%. It's just going to damage you big time.
It's going to kill your confidence. You know what I mean? Killing. And if you take those confidence hits, like you said already, you're going to burn out. You're going to be like, trading is a scam. Trading sucks. No, bro, you suck. You're giving up. You know what I'm saying? I always like telling people that. No, you can't blame the career. You got to take responsibility and blame yourself, bro.
It was so bad, bro. I used to go to sleep with open positions when I first got into trading. And obviously it wasn't a lot of money at that time, but like just, and just unnecessary emotional trauma, basically. You know what I'm saying? I'm sure you can basically, you can also maybe attest to that as well. It's just unnecessary emotional trauma.
You're such a good example for people to look at. And I am telling people that because I look to you for motivation too. Like the 1R, 1.5R in and out of my trades, stack these wins. I think like people like that one tweet we talked about before, people underestimate what 1R at 60% win rate can do for you.
Yep. 100%.
No, this is good, bro. All right, let's wrap it up. So for everybody listening, we appreciate you. Short and sweet today, but I think that this has some value in it. We gave you some tactics on how to avoid these big losses going forward. And if you have any questions or any topics that you guys want us to cover, please put them in the comments. Please let us know. We appreciate the feedback always. Make sure you're subscribed, hit the thumbs up, and we'll see you guys in the next episode.